I have done this in the past. This will be some kind of a repeat of the characteristics of, or what I have understood from success of people having been in equity markets for very long periods of time. And wealth creation. Now, I have not met people who have failed in equity markets, enough of them, because anybody who has failed in equity markets would be traders rather than investors. And I'm talking of all those traders come investors, or investors come very small time traders. In fact, they would have a huge portfolio and they would be trading in a fraction of their portfolio, living off the dividend income, etc., and who have really created wealth. Okay, now since I have not met those who have failed, there is definitely a confirmation bias that I think that this is what will work. I've seen it at work and I've picked up my learnings from those people. So I do not know people who have been ruined by trading and all. I've heard stories of very over leveraged and trading and lost money. I don't really identify with them because I would never do it. Right? So to an extent there is confirmation bias, but let us look at some of the characteristics that I have seen in them. First, as a family, the amount that they save and the amount that they spend is completely disconnected. I mean, you're talking of families with say 2-3 crores kind of annual income, 2-3 crores of realized annual income. I'll tell you what is the difference. And spending about 30-40 lakhs, right? So we are talking of a huge gap between what they are earning, paying tax, and what they are spending, and their ability to plow back into the market. So earning 3 crores and plowing back maybe 2 crores 70 lakhs or 2 crores 60 lakhs. So annually their portfolio is going up by that much in cash, plus a huge appreciation. Remember, appreciation is tax free. So on a 2 crore portfolio, or even a 3 crore portfolio, if there is a 10% increase in the value, that is 30 lakhs apart from the 2 crores that they are earning from other businesses. So 2.5 crores is going from here, and 30-40 lakhs is appreciation of the portfolio. Now this combination means they move from about 10 crores to 50 crores in 4 years time, right? I mean, that's an amazing speed at which they move, simply because of two things. One is they are able to put more money, and second, there is no tax on the appreciation till you sell, right? So a tax-free jump because of the appreciation, and a post-tax, they're still putting money in because they're spending much less. So lesson number one, they spend much lesser than their income, which means like parallel things, right? They're earning and they're spending. There is absolutely no connection. This is typically like a rail. They're going together, but they'll never meet. Right? It is impossible. They just have created a huge surplus. How have they created this huge surplus? A few, of course, have created by ESOP. A few have created with completely their own effort. For many of the people whom I met, the family started off with some basic wealth. So many of these people did not have to buy a house. The house was already provided by the parent. Parent was already investing in equity, which means by the time the kid is 15, he already has an equity portfolio, and the time he's 18, he's introducing, go and meet Raju uncle. Raju uncle is our share broker. You know, we have met so many times, etc., etc. So they start with all those advantages. I'm not denying that. They are not the people who have to go around finding, should I invest through this broker or that broker? Should I trust my RM? No, nothing. All that is short-circuited. The father says, this is the broker, you have to listen to this chart. So these relationships also with the broker and the wealth managers or whatever has been created over many decades. So there is no question or second guessing. If my daughter were to ask for a broker, I'd just introduce my broker. There is no time spent for her in looking for a good broker, right? That's one huge advantage. Most of them have learnt about investing and money largely by their own family experience or by getting hurt in the market. So the well qualified guys, the IIT engineers, the chartered accountants who are in this bracket of say 20-25 crores kind of wealth, have learned it through their own bad experience. Somewhere during one of the scams, they must have lost money, or they may have gone short and lost money, or they may have lost money in real estate. Doesn't really matter. So some of them had painful lessons, but largely they have had lessons coming from their parents saying, this is the hard lesson that I had. So yes, family where they understand the process of wealth creation better than other families where they say, you must take up a job, that is what you should do. These are all people who have jobs. Many of them have jobs, some of them have businesses, and from the jobs they are able to find enough time to be able to actively manage their portfolio. And none of these guys who are net worth of say 20-25 crores liquid net worth, I'm not talking of the house, none of them are DIYs. Most of them would have some advisor, some broker, somebody who's telling them, which will even parking the money in a liquid fund they would do through an agent, simply because they felt that somebody is there to take care of these assets. I have not seen these people work without some help. Now that help could be a bank relationship manager, but most of them know what to get out of the bank relationship manager. It is not a one-way street of just giving business. They are perfectly capable of saying, look, I have this private company and it requires working capital, please fund me for 5 crores or 7 crores. Here I'm giving you a policy, right? So they know how to play the game, and they play the game very well. All of them, if not some more of them, they all risk their money in equity markets, and then removed money from equity markets, put some money into real estate. All those things they have done. What are the other characteristics about these people? I have written something in the past, so some of that let me think about. Okay, first is, all of them could plan for the future and think about the future rather than the immediate. They would not be thinking, even 2021 they are investing, they buy a share, they're telling me, this is a good 50 rupee share and I think I'll be able to sell it at 700, 750 after 8 years, 10 years, 12 years, right? They will take a 10, 12 year view on management, etc. They know that they have to keep looking at it every 2-3 months or 6 months whenever there is a result. But they will project and say, okay, I have no plans of selling this for, I'm not buying this at 50 rupees, but I'm going to sell it at 750 rupees, right? I want a 15 bagger, I want a 20 bagger. They may be right, they may be wrong, but their ability to stick around with even a struggling company, knowing that one day it is going to do well, because they are convinced about the quality of promoters, and this could be remote. It does not mean they meet every promoter. They are in fact scared to meet every promoter, because then the promoters start saying, oh, I have this fancy idea, will you fund it, and things like that. So many of them just avoid. The promoter may not even know that they exist, right? They could be coming through a private limited company. They've been holding it for say 20 years, 30 years. So that is one thing. Most of them, in fact, I would think 100% of them had no dependents, or very few or no dependents, which means this generation was providing for itself and for its children. It didn't have to support the older generation. If anything, they were getting money from them, right? So if a father is a vice president in a bank and mother is a doctor or things like that, there is no question of the children having to help the older generation. They have to just do it for themselves. If anything, they will get money from the older generation. So they are that way hugely positive, saying they don't have to have any dependent or anybody like that. If they are supporting somebody, that may be fine, but they don't have to support those people. They're doing it more out of their own choice. All these people are very, very focused on their business or on their career, but they monitor their net wealth. They do not monitor their cash flow, because all of them have cash flow far in excess of what they need. They're spending much less than what they are earning, right? So they are not really bothered on a day-to-day basis as to how much is the cash flow. That is already provided for. Maybe some debt instruments, maybe some systematic withdrawal or something like that, and so that does not come into play. So there is no stress of the market is doing badly, what should I do? There's no connection. Like I said, earning 3 crores and spending 30 lakhs. Your income can fall a bit, you can fall 50%, but still it is way ahead of what you're earning, right? So that does not, the earning gap, that gap is a big contributor to the ability to take risk, right? Then yes, they're very keen on their business, but they find enough time for managing their portfolio. Most of them are earning just to create wealth, not for day-to-day consumption. They're past that. Most of these guys whom I know have some broker managing their portfolio, and they also would very rarely leverage. If they leverage, it will be for a particular transaction. If the broker comes and says, let us do this IPO, this is the borrowing cost, this is the selling cost, back-to-back deal, you will make 2% this month or 2.5% this month, they may do a deal. But largely this is not to disturb their existing portfolio. They may be having 50 lakhs or 40 lakhs lying in the cash bank account, but for this they will go and do a separate deal, borrowing 2 crores for exactly 7 days, 8 days and repaying. So these kind of short leverages which are very, very tactical, I need to do this leverage to be able to put a 2 crore application or things like that, they leverage. But other than that, leveraging is not something which I have ever seen them do. They just avoid borrowing. They don't have to pay interest. So of course, personally they may borrow for doing something, but that is also very, very rare and unheard of. Mostly everything is funded by the family business, or if they bought something in their personal capacity from their own pocket, but rarely will that matter. I do not know whether these are really team players, because they may not be listening to their team. They have teams. Somebody would be giving them advice on trading, somebody on investing, so they meet them on different days, they do something. But I do not know whether these people would really qualify to become a fund manager in a place, because I don't think they work on consensus, right? They will talk to many people and then come to their own conclusions, and then they will invest. So are they good team players? I really do not know, but largely yes, good team players for those people who have ESOP, because they've created a lot of wealth on the way to making money also. Most of them just love and enjoy the investing process. They can sit and talk to me for hours on business, and that makes me a better business analyst and not a better equity analyst, right? So invariably they do a good job of investing, and therefore perhaps they enjoy the process of investing. So they will take enough trouble to sit down, analyze their portfolio, see how much is the dividend income, how much do they need to earn from their main source of income, how much salary do they need, right? They will do a reasonably good analysis and share it with their children. So financial communication within the family for many of these guys is superb. So they know that their father has made a will, or their father's elder brother has made a will, and they shared it with them. They know what it is, they know why the will, they know how much is going for charity, right? So all those things exist, and I mean, they're investing only because they enjoy investing. The returns don't really matter to them, in the sense that you can't tell them, oh, returns are bad, so don't invest. They will invariably come to the market and invest, saying हमको ये एक ही चीज़ पता है, right? So largely I have done a hodgepodge thing of what characteristics I have seen. Some of them don't have children, some of them have children, some of them are very young, in the sense they are maybe 45, but there are some people who are older and who have nobody for whom they are earning. So all kinds of combination exist. So just check what you like. Thank you.